warm welcome to everyone. I am Shrija Agrawal, and you are watching the third dispatch of the series Future of Infrastructure Investments. We have a pretty meaningful panel here, but before we dive in, it's time to do some context setting. India is a country with a vast infrastructure network and even greater infrastructure needs. Infrastructure has also been identified as one of the key areas for the sustained growth of the economy. It was one of the key elements identified as being integral to the Make in India campaign of the Government of India. According to the 12th five-year plan, India required an investment of rupees 55 trillion during the period 2012-17 in the infrastructure sector. Further, to achieve a gross domestic product of $5 trillion, approximately 3.5 billion rupees by the year 2024-25, the Government of India envisages investment requirement in infrastructure of $1.4 trillion for the period 2024-25. Despite the importance attached to it, the unfortunate reality is that the gap between the country's infrastructure needs and what the sector has achieved over the years continues to widen, and the deleterious impact on the sector is felt on the economy as a whole. One of the major hurdles faced by the infrastructure sector is the difficulty in accessing funds, low cost funds in particular. Continuous access to capital is a prerequisite for the development of the infrastructure sector. Given the nature of the sector and the substantial requirement for funds, equity has necessarily played second fiddle. Debt funding is a primary avenue of funding for infrastructure projects. Debt funding for the infrastructure sector, though, has traditionally come at a high cost, and this trend appears unlikely to change. The spate of defaults in the sector only compounds the difficulties in accessing funds. The SEBI Regulations 2014 were promulgated in September 2014 to provide impetus to the sector. The InvIT regulation provide the framework within which infrastructure investment trusts raise funds from investors and deploy funds in infrastructure projects. The primary objective behind InvIT is to facilitate the channeling of private capital into the infrastructure sector. InvITs were expected to broad base the investor pool while simultaneously lowering the cost of funding for the players in the infrastructure sector. InvITs also provided an opportunity for seeking additional funding without creating control of the entity. While NVIDs have engendered a significant amount of debate and interest, the jury is still out on whether we have seen the kind of momentum as expected from this space. In the next 50 minutes that I have with this August panel, we would like to discuss and debate the opportunities, challenges, and the roadmap ahead for InvIT's infrastructure sector in general. Please help me welcome Prasad Gadkari, Executive Director and Chief Strategy Officer, NIIF, Kranti Mohan, Partner, Cyril Amarchand Mangaldas, and as always joining us is Shah, Chief Executive Officer and Executive Director, IndiGrid. Gentlemen, thank you for joining us and thank you for putting your time and energy to this. It means a lot to us. Let's sort of begin with an open-ended question and something which really forms a great segue to our previous two dispatches. And perhaps, Prasad, I would like to begin with you here. Continuous investments in creating and upgrading physical and digital infrastructure is a need of the hour, is something which we hear from almost all the panelists. Harsh will recall this really has been the defining statement for all the two dispatches too. It is estimated that India requires close to $200 billion of capital for the infrastructure sector each year. This is twice of our current allocation, this is $9,200 billion. I mean, generally speaking, how can we mobilize more capital in the infrastructure space?
Thank you. Thank you for the warm welcome, Shrija, and happy to be here at this panel discussion. Moving on to the points which you made and the question which you raised, I think if you ask me, and from our perspective, financing of this magnitude clearly needs a multi-pronged strategy. There is no one instrument, one institution, one structure which is going to help us get there, and I guess everybody understands that. From what we have seen, I think government has been really focusing on two big approaches, if I may put it that way. And these are two real developments one has seen especially accelerated over the last, I think, 4 or 5 years. One is on action on fiscal and policy side. And clearly, there are notable developments which have taken place to encourage and bring in more investment into the country, foreign investment, private investment. One of which all of us are aware of is the tax benefit which they have given to the sovereign wealth funds, the pension funds. These are useful and extremely strong measures and strong signals which the government has taken, and I think the investors have appreciated that. The second example I would give is how they have been tweaking and improving on the policy front to encourage investments in sectors where it's not been that there's been a flurry of investments in the past. So say healthcare PPPs and stuff like that. Private sector is a very strong player in healthcare sector, but if we see PPPs, that's a space in which government would like to bring in more private investments. So recently, you would have heard the government had a viability gap funding. They have increased the funding program to almost 60% of the project. So earlier, 40% of project cost was allowed as viability gap in other sectors. Here, they have gone out to give almost 60% as viability gap measures. So you see these tax benefits, these policy measures by giving and improving the viability for certain sectors where they want to bring in investments. I think that is one set of actions which we see, which will help us bring in more investment and help tide over this the gap which we have. The second I would say is again, if you see over the last few years, there is an increasing, I would say, realization, recognition, as well as action on the government regulatory front to customize products and project structures. I think there's a clear realization and, as I said, actions to show that infrastructure again need not be a one-size-fit-all kind of strategy. The strengths, the weaknesses, the focus areas, the priorities, the time horizons for a financial investor, infra fund, for pension fund, for sovereign fund, for developers, contractors. For each of these classes, it's different. And increasingly, I think we have seen the customization and tweaking of products to meet requirements of each of these classes of investors. And I'll give you a few examples. If you take on the sectoral front, and take, say, road sector, I think we have seen evolution. We always had the BOT scheme, which was the traditional scheme. We have seen evolution and takeoff of two project structures within that itself. One is the TOT, as all of us know. TOT is really for investors and maybe active institutional investors who are happy to take the market risk, but don't want to take the construction risk. So you have one kind of scheme for these kind of investors. On the, I think almost the corollary or the counter side of that coin is a HAM, which is a hybrid annuity, which is for contractors which are okay to take the construction risk, but may need some support on financing and may not want to take the market risk. So you have these two kind of products on those road sector. You take airports, you have two kinds of models which are emerging, where airports authority is selling or bringing private investors for operating assets. At the same time, you have state governments which are coming up with greenfield projects. So, so there is these multiple project structures which are coming into the market and each catering to a different set of players. If you look at financing instruments, right, moving on from TOT, InvITs itself, one of the important aspects of your program is I think an excellent instrument which has been given good momentum in the last couple of years, especially so. I think the product was introduced maybe 3-4 years back, but in the last year or so, the kind of momentum which it has been given by SEBI, by income tax, by everyone. I think that's fantastic, because InvIT again is a product where you're trying to bring investors who maybe, on institutional fund, maybe a little bit more passive, want steady yields and long-term investment. On the retail front, obviously, it's a great product for if you get into a good InvIT. So you have things like InvITs which have been brought to the market. Then if you are even more risk averse, right, you want to try out infrastructure, but you're not really wanting to take any equity risk, then you have products like, say, infra companies, which are lower risk and obviously lower return. But that's again an exposure to investors who would want to be happy with the lower risk, lower return kind of thing. So these are the kind of instruments one has seen shape up. And if I might add, last but not the least, NIIF, creation of NIIF itself is an important avenue to channelizing and bringing in more capital, right? What is NIIF? We have been given 3 billion. We have raised external capital, give and take. I think overall across all our direct in the funds which we have, along with the co-investment pools, we estimate we could be handling about $8 to $10 billion of equity capital itself in the next few years' time. And within that, we have three products, right? We have one fund which is a pure infrastructure fund focused only on core infrastructure. We have one fund which is a fund of funds which is focusing on multiple sectors of the economy which are important for the economy. And we have a third fund which is more like a private equity fund, which is focusing on strategic sectors of the economy, say healthcare, food and agri, debt financing. So across these three fund platforms, we have created like 10 vehicles already. There is a roads vehicle, there's a smart metering, there's energy, there's affordable housing, there is healthcare, there is clean tech. So these are, not to belabor the point. So this is again an important tool within this whole gamut of things which I outlined for you, the way government has done, and I think it's being beautifully done. Obviously, it's not a perfect situation. There is more to be done. If I have to look ahead, what else could be done? I think municipal bond space, that's a fantastic space where we have seen some action, but I think we still have a long way to go. The issuances which have happened are very tiny as compared to the potential, and a lot of work can be done to galvanize that kind of segment. Sorry, I know I've been going on, but I just wanted to lay out the landscape in front of you in terms of what's been happening and how this financing gap, which you mentioned, is being bridged brick by brick.
Thanks, Prasad. That was pretty meaningful. I come to you now, Harsh. Harsh, we just heard Prasad, and he sort of made these opening remarks and very compelling points made here. And he sort of said that it is multi-pronged strategies pursued by the government. One instrument or one asset class can really not sort of fill in the huge infrastructure mammoth requirement that we have. He also spoke about the fact that how the structures are being tweaked and customized for different classes of investors, and of course laying down to the fact that how NIIF sits beautifully into what they're trying to do. Harsh, I want to understand from you, now, given that, with Invit, and you guys have had a great run with Invit, even if I compare it to other people who began Invit who have not necessarily seen that kind of momentum, where does Invit really fit in terms of perception from investors amongst the multi-pronged strategy and the instruments that were outlined by Prasad here?
No, thanks, Shrija. I think Prasad made all valid points, and I fully agree that the size of the plan that India is looking at in terms of infrastructure cannot be achieved by one sector, one strategy, or one method of raising capital. And I think all the methods and strategies Prasad enumerated, including, as he said, creation of NIIF, is all the steps in the right direction. I would just add 2 points to your question. One, considering government itself being majority of owners of infrastructure asset in the country, if the monetization program of the government can be more structured, can be expedited, which would give impetus to all these strategies, whether it is infrastructure fund, whether it's InvITs, whether it's direct capital to the country, and it will help in the fiscal deficit of the country as well, which directionally that is what has been discussed by the government and they want to do it. However, I think it has been taking time, and if this government can expedite that, what would that do is two things. One, it would not only reduce the fiscal deficit and attract capital. Second, it will develop the market, because for market to develop, what the country would need is large chunks of asset. And the biggest asset owner today in the country is government of India. And if they start opening up to monetization drive, you'll see a more liquid capital market or secondary market of assets in the country, which would eventually result into a much thriving market for infrastructure asset and investment in the country. Now, the second point that you made on InvITs, I think a year back there was still a question. Now where we stand today with 7 InvITs to REITs put together, I think it is a matter of time where that would become a main source of financing for tapping capital markets. The private markets or the fund market would still continue, but we believe it will be rare to see an asset owner to do an equity IPO anymore, because the investors would start demanding yield dividends coming out of the asset and better corporate governance, which is what InvITs in general offer, whether it's private or public. And therefore, we believe that InvITs are here to stay. And what will eventually happen is that more and more InvITs would come either from the house of government themselves, or even the private sector InvITs that are out there would become larger, and maybe new sectors would come in. What is untapped right now in InvIT space is sectors like healthcare or education, or which are social sectors, as well as have an element of yield and infrastructure, which can attract a lot of stable capital. But considering that the regulations in those infrastructure sectors are, I would say, behind the regulations of road or gas or transmission, etc., it's been taking time. But we believe that with the focus on these sectors and the amount of investment that would need, we'll soon in next few years see, education InvITs, infrastructure related to hospital coming out as that. And all of that is within part of the definition of infrastructure. As long as there are right business models put in place by business owners, you would see capital getting attracted towards that direction as well.
That was sort of a very meaningful assertion coming from Harsha. He said that no asset owner in the near future will perhaps do, a capital IPO. And let's see sort of if that really happens. And perhaps he also sort of mentioned that we would see more invites coming from the House or government also. Talking about government and fiscal deficit, which Harsh touched upon, I think it's important to talk about the elephant in the room, really about the pandemic and the pandemic, concerning disruptions that we've had, unprecedented event in the history of mankind, and that have had sort of significant impact and disruption all over. States have high fiscal deficits and are hit with liquidity issues. The budget needs to front load infrastructure investments. This so as states contribute about 40% of total infrastructure investments in India. Very important question, really, for Prasad. I'll begin with you and then go on to Harsh and perhaps Kranti if he wants to add to it. That how can the center really shoulder more of the burden of raising funds to drive infrastructure investments and projects? I think it's a very poignant question, especially coming at a time when budget is just around the corner.
Um, so Shrija, again, I think building on the points which are made by me earlier and Harsh also alluded to it. Clearly, even before the pandemic, the national infrastructure pipeline, which was inaugurated, that is a program which is about 100 lakh or 110 lakh growth program, right, over a 5 year, which is probably double what we have done in the past. So in itself, the size was pretty large, and obviously the pandemic has created a bump into the economy, which hopefully the signs are at least we are fast coming out of. But nevertheless, it is going to create a further ripple into the financing plan. Uh, I think what the government can do is already doing is one is to self-generate resources, right? And towards that, this whole concept of asset monetization, or really asset recycling, as I would like to call it, right? Where it's not only monetizing, it's not as if only you sell the assets. It's important that you sell the assets, then whatever the money you generate, you try and park it into some kind of a fund itself, right? I mean, fund I'm using in a loose sense, but a mechanism which is like a lockbox mechanism where that money is therefore going to be used for only newer productive, newer build out of assets. So asset recycling program, I think, could be a very, very important tool. We have seen that in roads through TOTs. We are seeing, and I think we are expecting shortly InvITs, government making a debut into the InvITs, which will be, I think, a very strong and a significant step in itself, where National Highway Authority is planning, Power Grid is planning, and then there are a bunch of other sectors where this is relevant, right? Gas pipelines could do it. Harsh spoke about, I do totally agree, even in social infra domain, whether it's healthcare assets, university infra assets, railways could do it. So various, they have to, I think they have to put their regulatory and contractual structures right. But once that is in place, there are multiple sectors in which we can introduce and do this program, which will help us meet and tide over this gap which has got created. Separately, I would think, center would want to encourage states also to do that, right? Why does center only have to do it? States also have great assets within themselves. And one of the things, I think the government is looking how can we encourage states to do asset recycling and asset monetization at their itself? And whilst whilst one is a discussion thing, but I think there are clearly two action points which potentially, and these are all ideas, which central government can do with the state governments to encourage and incentivize more, right? You can, one, provide them technical support, because not all states will know how to do all of this. So, and I'm sure Kranti can support, right? Kranti can talk about that in terms of how do you structure, right? What does it mean at the state level? How do you regulate? How do you put the regulatory structure, contractual frameworks, and all of that? But center can provide a technical support the way multilaterals provide technical supports for building out programs, for getting good advisors, getting good reports done. All of that, I think, is one thing which the center can do with states. Second, one more thing they could also consider is, if states do monetize whatever assets, and maybe they can have a threshold, you can always think whether can you provide some additional top-up support, like a maybe additional 20% or 30% from the center side. So every $100 you raise, I will give you $20-30 as an extra fiscal support. And see, these are not, to be honest, I would love to say these are my ideas. These are not my original idea. These are things which have been done. Australia is a prime example. They have done these kind of things with the federal government, regional governments. I think these are ideas which the center could work with the state to encourage and help us bridge this deficit. There are a few other ideas, I'm probably getting ahead of myself. We are discussing with the government on newer modes of financing. There is for a large project, greenfield projects like expressways and all, we're discussing a new model, which is an SPV model of financing, where there are other bells and whistles which are added. It's still work in progress, to be honest. But then there are, these kind of project structures which are possible, which will further help us tide over this gap.
That was very sort of interesting suggestions and ideas coming here from Prasad. Harsh, I want to add to that. He spoke about the fact that perhaps the center should also encourage the states to do asset recycling, and the fact that a lot of InvITs coming from the government's house will also provide impetus to the bridging the gap in the infrastructure. What are some of perhaps your ideas in this direction, especially the time when budget is around the corner? What do you think?
So I think considering it's linking to budget in two parts. One is fully agree with Prasad. Incentives are required for states to move, especially in a country like ours where there is strong federal and a strong central government scenario. So most of the sectors that we are talking about are either concurrent subjects or the assets are with states. So the government would require collaboration and active interest from states. And I think one such method which Prasad recommended is not only done outside India, even in India, for example, power sector, distribution companies are getting advantage if they reduce their losses beyond a point. The center would be funding a little more under the scheme of Uday, right? So similarly, the method works. And I think the monetization, or rather, let's say recycling, as Prasad put it, unless and until it happens at a state level or a municipal level, it is going to be a one-time exercise at a central level, and it may not succeed eventually. So that exercise needs to cascade down to state and municipal levels, which would eventually result into a far more liquid market. Plus, it will result into an opportunity of tapping in domestic savings into domestic markets. Right? We have domestic savings getting captured into very limited financial institutions, right? Which then invest on behalf of the domestic savings via 1, 2, 3 levels of intermediaries, whether we call it banks, pension funds, insurance companies, and then subsequently mutual funds. So there are so many layers of intermediaries that a normal domestic savings getting tapped to invest in Indian infrastructure is limited. However, if there are right capital structures built for municipal or state and eventually federal organizations, think about a citizen, if you can invest in one is to your country's road assets without getting into a corporate governance issues in a normal company, but you still can, you invest into a road that you use, or similarly invest into a transmission line that you use, or in a municipal level, you invest into a local waste management facility, which the society is using. It is going to build a very good fabric in the country to tap into the domestic savings into the domestic assets. And I think that is something which is, for a longer run, extremely important. And that would happen when the cascading happens of asset recycling programs of different kinds across hierarchies of the government. Considering the budget, I think a lot, we don't want to make it a budget session, but a lot is desired from the budget. I think just for related to infrastructure itself. And if I can just narrow it down to InvITs itself, there are tax, I would say, anomalies where InvITs and REITs pay STT like a normal equity, but get taxed like a debt mutual fund, which requires a 3 years of holding period. So we believe it's an anomaly, and we're requesting government to, I would say, streamline that, either remove STT or bring it back to 12 months, one of the two. And similarly, there are path-breaking initiatives which government can take. For example, Section 54 EC of the Income Tax Act. So anyone who sells a real estate in India, invest backs in real estate, they don't pay long-term capital gains tax. Right? That's something which most of us would have used. Now, that principle was from the thought process that if you are only transferring your holding in one real estate to other real estate, and therefore the capital gain should not be applied. However, why should that not be applied to InvITs and REITs as well? Because ideally, InvITs and REITs is nothing but owning real assets in India in a more professional and a liquid manner. Right? So if the Section 54 EC is including REITs and InvITs as a part of approved securities, what would happen is that you would incentivize the local population to invest in assets in a professionally managed manner. There is no tax loss because people still reinvest back the money that they generated to in some kind of property. Instead of that, you channelize that towards a formal economy, like a either REIT or InvIT or anything that is listed. You will attract, you'll kind of push the economy towards formalizing of owning real assets in the country. So I think these two very small nuances, but impacts the wider public and population to again encourage the overall development of capital markets.
Thanks, Harsh. Kranti, I also do want to get at some interesting ideas coming from Harsh here, especially talking about, the STT, removal of STT transaction, perhaps bringing back to 12 months, or the fact that you also said about, how can you have the similar kind of structures that we have on long-term capital gain tax for owning a real estate property? Why not bring that to InvITs and REITs? I would want to understand perhaps your views in that direction.
Yeah, sure. Thanks, Shrija. I think I'll take a couple of points which were touched upon both by Prasad and Harsh. And one of the key questions that we're discussing right now is how to incentivize states to adopt recycling of its infrastructure or other real estate assets. See, if I take the example of InvITs, it has been an evolutionary progress. The first InvITs were taken to market, listed and established as a viable product by the private sector. It's only once you started the panel by saying the jury is still out on whether InvITs have established themselves as a good infrastructure financing tool or not. I think that question is very well settled now. InvITs have established their reputation, and the private sector worked with pioneering InvITs like IndiGrid. We had on the road infrastructure side, they established their importance in infrastructure financing, and that's when even the central government stepped in to look at them as a model for recycling their own assets. Now we are hearing about PGCL doing an InvIT and NHAI. Similarly, we have not seen, while we have seen on the road side, state assets being monetized or recycled. I like the word recycled better, the way Prasad put it, instead of monetization. But states, while state assets like roads, etc., have been recycled, there hasn't been any big ticket or a big bang InvIT focused on state assets. And some of the areas where it could happen is, for example, urban metro rail infrastructure. That is a prime asset, and lots of we have seen phenomenal growth over last few years in the metros that have been established across the country. Uh, that is one place. The other, again, it has come up a couple of times. Both Harsh and Prasad mentioned healthcare and educational infrastructure. Now, yes, that's the next evolutionary step. But again, like tax, there are other parts in which the regulatory framework is evolving. While Harsh mentioned that both healthcare and education are part of the infrastructure sector, but it's not clear for the purposes of InvITs and REITs. Whether you do a real REIT for, say, a chain of schools, for example, or a chain of hospitals, or whether you do an InvIT. So some of these things, again, would require clarity. And if a state government were to front or try to take up recycling of social infrastructure, it would clarify a lot for others to take the plunge. And that's where I think tax, of course, stakeholders are always interested in removing tax anomalies and gaps and bringing parity, and InvIT to start with, and globally the trust structures to start with, whether for infrastructure investments or for real estate investments, the biggest attractiveness is the pass-through tax structure. And now rest of the other things around the tax framework can follow. And one limited point on that is, again, from the government side, I think the messaging has to be a little more focused. one request would be not to change the goalpost midway. We had a complete pass through DDT exemption, which moved toward dividend withholding tax framework last year. Now, I think InvITs still are more attractive, at least as a non-tax specialist view. I think InvITs are still attractive for people to do, even from taxation perspective, and they bring in the added benefit that Harsh pointed out, that that money is actually getting or utilized for funding newer greenfield projects, etc. So it's a win-win for all. But again, moving the goalposts makes it difficult to give a long-term vision and clarity to both sponsors and developers, and also to investors, and lastly, even to the government. Government is also not able to have a clear vision whether this is X amount of money we are losing as tax leakage, or Y amount of investment we are getting. If you keep tinkering with the rules, regulations, etc., midway.
Yeah.
And again, on budget and other demands, I think this is not a budget focused session, so I'll not touch upon it. But again, the demands on government are never ending. As and this is InvITs have been there for since 2014. Um, Organized or post Harshad Mehta, fully regulated capital markets have been there for a long time, and that's why we are here today, where equity investments are very regulated, streamlined, laws are all clear. In last 6 years, um, government has tried its best to streamline things, but InvITs as a concept, InvITs or REITs, and infrastructure as a sector, like in his opening remarks, Prasad pointed out, is a complex animal. Uh, what suits a renewable energy asset may not suit a road infrastructure asset, may not suit a transmission asset. So government is also has a tough job in its hands. But over the years, at least the gaps that people have identified, including now, government will see through its own two marquee InvITs that are proposed. There are certain things where government can proactively and across regulators. There's also to get all the regulators on board so that no one has any misgiving. This is a regulated, government blessed, um, a better a product with a much higher corporate governance, and aimed at risk averse investors. So, considering all of this, I think there should be clarity on amongst the regulators, also different arms of the government, that the need of the hour is to encourage and facilitate it. And where they are seeing various kinks or missing areas where the gaps need to be filled or ironed out, that's where something perhaps government can look at more proactively. In which,
Okay. Yeah.
if managed properly, are going to uh, spearhead our infrastructure financing over the next few years.
Okay, thanks, Kranti. Thanks for that. I think that was sort of a great segue to my next question. Both of you sort of spoke about the fact that so many InvITs are coming to the government's house. Recently with the NHAI, Tara Power, Power Grid already in the pipeline. So that sort of really augurs the next question, that what is the future trajectory of InvITs in India? Because like you were mentioning, that the jury is definitely out, and InvITs have definitely established themselves as a compelling investment alternative for today's uncertain time, beset with high volatility given their steady yields and favorable risk reward. So, in that context, really what remains the future trajectory for InvITs in India? Perhaps, Harsh, I can get on to you and then get on to Prasad on this one.
Yeah, thanks. So I think, Shrija, as Kranti mentioned, that over last few years, SEBI especially have been very proactively working with the government and launching, amendments to the InvIT regulations and more flexibilities. Uh, and I would give you an example of a new market coming to reality. In any market, as Prasad mentioned, you can't have just one type of product or instrument. And looking into that, even within InvITs, SEBI ensured that there are variety of investors and variety of assets that can suit. Like in equity, you have a publicly listed equity, you have an AIF invested businesses, and you have a private equity businesses, right? And all of them essentially are means of owning a particular business via a company's act, via a company. And what they represent, whether it's a publicly listed or a private equity, is the kind of corporate governance and the risk appetite of the investors who are investing in, and the maturity of the business. So ideally, an early stage business will not really go and list successfully, and a very late stage mature business will not go and raise private equity, right? So essentially, whether it's public or private, it is a tapping into a capital source to ensure that the capital is available for the businesses to grow. And therefore, like in equity, in InvITs as well, there are a variety of uh, ranges provided by SEBI. One is a publicly listed InvIT, which by nature is more regulated, higher disclosures, better governance. And then the other extreme is unlisted InvIT, having the same kind of tax advantage. And they have, I would say, substantially lesser regulations to be followed, considering that that's akin to a private equity investment than really a public infrastructure investment. So what we see is a parallel being developed of InvITs, like an equity, listed equity, private equity kind of a universe in a normal business for an infrastructure, a listed infrastructure InvIT, a privately listed infrastructure InvIT, and an unlisted infrastructure InvIT, which offers both developers who runs businesses kind of choice that if I have a risky business which is not matured yet, I have under construction asset, I would go for an unlisted InvIT today. And I would attract similar kind of investors who would have a relatively higher appetite of risk. And if I have a business which is very stable, matured, and can live by the higher corporate governance norm and lower risk, I would go and tap into the publicly listed market. So from an instrument perspective, there is a variety of range available now for both developers as well as investors to choose from. And you would see the same investors, whether it's let's say domestic HNI or a global investor, would invest in an unlisted InvIT as well as invest in a publicly listed InvIT. Essentially, they have a spectrum of tools to invest into the business they like and the risk maturity or the maturity of the business that they are investing in. So I think opportunities have been created now by SEBI. Second, the first momentum of growth was led by private sector. So everybody would have liked government to start first and then follow. However, I would say the initial spade work has been done by private sector, where between these 9 InvITs and REITs put together, there's over 2 lakh crores of assets in the country, which are owned by InvITs or REITs put together. And within that, if you count the investor quality, is I would say between CPPIB to GIC, KKR, Blackstone, Brookfield, all the global largest money managers as well as sovereign wealth fund has chosen to invest their capital via InvIT as an instrument, as one of the instruments. So from an endorsement perspective, there is a tremendous endorsement that has been provided by global capital who has seen similar platforms succeed in the other geographies. So there's something right that India is doing in terms of its infrastructure as well as the regulations, which is culminating in this size of capital growth. And the third one is government InvITs themselves, which will provide size to this 2 lakh crore. That once the asset recycling program starts kicking in a big way, and government's own InvIT started coming in a big way, it took 5 years from 0 to 2 lakh crore. I think it can take 2 years from 2 lakh to 4 lakh crore if in a right way it is launched and successfully executed. So what we have done till now, what we have seen till now, is the initial hard work where both from a regulators, government, private sector, and investors to put together something which works well, and which is what has scaled it to a 2 lakh crore size today, where from now on it is going to be a function of how much of asset flow that can be created in the country, considering globally capital is available for good assets. And second, how does government and, as Kranti mentioned, interregulatory issues are resolved faster? Because first time in the country that has happened that this amount of capital has come in, equity capital has come in, and still debt capital is not, efficiently coming in because interregulatory issues between IRDAI, SEBI, RBI is not resolved. And most of the asset owners today who have invested this size of capital are scratching their head that what just happened because the regulators are still not talking to each other while all of them come under the umbrella of Ministry of Finance. So three segments. One, uh, asset flow, where government taking a lead would help now. Second is government supporting with interregulatory framework, which ensures that the capital can flow in both debt and equity in these platforms. Actually, yeah, these two would sufficiently incentivize the InvITs to have a very steep trajectory in terms of size from now here on.
Thanks, Harsh. Thanks for that. That was sort of very meaningful. Said three very important points mentioned here in terms of trajectory. That drawing parallels to vis-a-vis a corporate raising capital as to the capital growth trajectory that it follows. Second, the huge stamp of faith coming from institutional investors and the best asset money managers across the world. And third, the fact that whilst the private sector might have taken the lead, how the government is following. So there's a huge endorsement coming from the government itself on the InvIT's trajectory. There have been some recommendations made here from a practitioner's perspective, what the government can do, especially to solve the interregulator problem in perhaps providing more impetus to the space. I think I will just sort of get on to you now, Prasad. And that's an interesting question. And I think we spoke about quite a few initiatives by the government here. And I think you began your opening remarks with that also. That is one of the few months back, the government announced over rupees 100 trillion national infrastructure pipeline, which is likely to play a key role in India's infrastructure development in a post-COVID world. All the government finances already constrained due to reduced tax collections and the economic fallout of the pandemic. How can the private financing really bridge the gap? What do you think?
So Shrija, to be honest, I have kind of touched upon what are the all of the building blocks which will have to come together to meet this, right? Across investments and structures and co-opting state governments. I think that is really the way it is to happen. And as I again alluded to, we have three tiers of government, right? There is a federal central government, there is state, and there is local governments. And if you see the national infrastructure pipeline, right, it lists literally every sector. They've listed some 7,500, 8,000 projects. So for the first time, I think the government has created like a register of literally, line by line there is entry. So that itself, I think, is a fantastic move, because now everybody's attention is focused on what it is and every line, right? There is literally a list of projects: X project, Y project, expressways, this project, this railway, this expressway, this port, etc. And therefore, and what we have also see and hear is there is an active mechanism which the government is putting under the Ministry of Finance to track and monitor this. So it's not as if a pipeline is created and it's left, right? There is an active tracking mechanism, a monitoring mechanism. What it means is government and Ministry of Finance will be talking to the line ministries, to the state governments, to the local bodies, and literally there is a periodic review which is taken, what we see in corporate avatars, exactly the same way. And in fact, even several times we feel in a much more efficient way, they're tracking it. And that tracking mechanism itself brings focus and energy into developing that. So that it will help. Second is all of these instruments which we talked about. I think they will have to come together. Government, private sector, investors. See, it's a game which everybody has to play their role. It's not whether it's private or investors will have to. I think everybody will have to do in a synchronized manner. What that means also is, frankly, a lot of times regulatory things come up, and Kranti can be a testimony to that. But several times regulation is a reaction to some issues or some misdemeanors which happen in the market. And unfortunately, for one small act or one act of somebody, rest all get penalized or at least constrained by those regulations at times, because the problem is really in one quarter. It's not as if the whole sector has a problem. But that is where what I mean is, whether as developers, as investors, I think everybody has to collectively play this game properly. Then only this whole program will move ahead. So I think those are the really 2-3 things. There are newer areas. I've already said urban infrastructure is the third largest thing in the national infra pipeline. That is where we have seen the least amount of private sector participation, frankly, relatively. We have to do what is required to encourage these sectors, right? Whether at one hand, one solution could be, can we create some kind of a central facilitating agency? Again, a new thought I'm putting on the table, The way they did with solar projects, they created a solar energy corporation, SECI, which galvanized the sector, which really gave a boost to the sector. See, wherever you have a center state dynamics, that's where we may have to come up with newer, interesting ideas, and government itself has done it. So can we do a SECI like entity for, say, urban infrastructure projects and urban PPP projects? I think those could be, as I said, it's a third largest like that, you can boom, bring in far more private capital into PPP projects. Municipal bonds, I've already spoken of. If you can galvanize, if you can incentivize, if you can support ULBs to come up with those kind of instruments, that will be another instruments. So I can keep going on, but I guess you get the broad sense and broad drift in terms of where this needs to be taken.
We get the broad drift. I would sort of just pass the ball on to Kranti and Harsh. If anything you want to add to this, otherwise I think what said was pretty meaningful and quite aboutful here.
Just a couple of points. One, the listed, and if you look at the listed and existing InvITs today, they bear testimony to the phenomenal job SEBI in particular and government in general has done in relation to InvITs. In a short span of 6 years, we have all three types of InvITs. You have unlisted InvITs, you have private listed InvITs, you have public listed InvITs. If you look at the infrastructure sectors that are covered, again, you have transmission assets, you have road assets, you have telecom infrastructure. We are looking at renewable energy, and hopefully in the coming years, urban infrastructure, like Prasad mentioned, whether that's transportation infrastructure or other forms of infrastructure. So the base, and if you look at, and again, it goes on to speak a lot about our regulators and how this entire InvIT and REIT concept was envisioned. REITs as a concept started in US in early part of 20th century. They picked up a lot in Europe in around 80s, 90s, and especially after European Union directives coming in place. In other jurisdiction, if you look at it, they still haven't gotten that volume. It's still a specialist product. Whereas in a market like India, in 6 years, we have 7 InvITs and 2 REITs, and hopefully another REIT listing in another 2 or 3 months in this financial year itself. So that bears testimony to the thought gone behind it. Now, the government has to take it to the next evolutionary level, which is one, encourage states to use it to recycle its assets. And second, what over 6-7 years, it's almost time. If you look at equity regulations for listing, SEBI almost every 10 years revisits them and changes them. We earlier had ICDR, as we call it, lawyers call it, issue of capital and debt securities regulation. We had in 2009, government came up with the new one in 2018, and going by the same measure, we are almost there for a review of the InvIT regulations. And I think the experience over 6-7 years has given us a lot to think about and iron out. This is well suited to spearhead, like I said earlier, the infrastructure financing needs of the country.
Thanks, Kranti. Thanks for that. I think I'll just get on to Harsh now, since I have Harsh here and I have to ask this question to him about the recent acquisition of about 24% stake in Parvati Golden Transmission Company. The takeover is subjected to regulatory approval, Harsh, is on a cost plus model, as we know, implying assured regulated returns of 15.5% ROE. Now, how does this acquisition really affect IndiGrid's overall portfolio? And how do the returns of this asset correlate with your existing blended portfolio?
So, sorry, I'll just touch upon the earlier point with Kranti and then go to the specific question. I think the question of private sector investment in the country is very important. If you look at any trajectory of any country from a developed economy to a rather developing economy to a developed economy, it has happened only on the back of channelizing their own savings and capital. Not 100% on foreign capital, not 100% on government capital, essentially a mix of all, but finally the capital needs to be channelized from domestic savings. And that is something which has the possibility of transforming in India, considering our savings rate being substantially higher, how do we channelize these savings for India's assets? That should be the question which government should be asking from a regulatory and channelizing of savings perspective. So that's the, I would say, one point to look at in channelizing more private sector investment in the country. On the second side, as you ask for the asset, I think it is part of our core focus. We are looking to acquire transmission lines in the country, and this is one of the unique assets with operating track record of 5 years. And it's a joint venture with Power Grid, which we acquired from Reliance Infra, and they do want to monetize their assets. And as part of their monetization program, they decided to sell it, and we participated in that. This fits into our business perfectly because this is part of the interstate pool of transmission assets. So the credit quality remains very well. It's a cost plus asset, which is the first in our portfolio and very limited in the country, but it just has a pass through of regulated returns. So that's a second unique aspect. So I think in general, it fits our business perfectly, and it just takes us to approximately 15,000 crores in size now.
Okay, that was Harsh's insight on the asset allocation that they have done just recently, and I will sort of get on to the question on the union budget because I think that is sort of keep coming back in a conversation here quite a few times, and I think that's a very important question, and I think it's just so relevant right now. The union budget 2021 had allocated rupees 15,825 crore to the Ministry of Power and about $706.95 million to Deen Dayal Upadhyay Gram Jyoti Yojana. Currently, the Indian power sector is undergoing a significant change that has redefined the industry outlook. Sustained economic growth continues to drive electricity demand in India. Are we expecting the sector's need for a higher budgetary allocation and fast track approach by central state nodal agencies to be fulfilled in the Union Budget 2021-22? I'll come on to you now, Prasad, first, and then get on to the other panelists.
Okay, I have no idea what the budget will speak about this, but one phenomenon I will talk about is, see, what you mentioned is honestly, I'm not even sure it is actually a budget item, because there are a spate of things which we see the government nowadays do outside of the budget itself, right? Throughout the year, we are seeing several policy actions which are being taken across sectors. Not only power, within power, we have seen a number of things, whether it's transportation, right? So I have no idea, to be honest, what the Honorable FM will do in the budget. But outside of the budget, they are working on specific sectoral issues, and they are talking to investors, taking feedback, and working on each and every measure, right? How do we make it easy for investors? How do we reduce friction? How do we create a single interfacing kind of mechanism so that when investors are dealing with project issues, whether center, state, there is an alignment and there is a streamlining of this. That I can tell you is already happening. Directionally, I think that's what I will comment on this one.
Okay, Harsh on Kranti, anything to add upon to sort of what just Prasad mentioned?
I would just say that, while budgetary allocation is one thing, but the theme over here, what we are discussing is that how do you rise beyond budgetary allocation, right? What we need is, and as Prasad mentioned, these policy actions which remove the dependence of the sector on only budgetary allocation, right? What that would mean is to have business models that are self-sustaining, they're commercially viable, investors are looking at it, the regulations are robust, which allows them to invest comfortably. There are frameworks which allows their entry and exit to the sector comfortably. So basically for every sector, whether it's power sector or renewable or transmission generation, within each sub pockets, more than the budgetary allocation, what is important is to have frameworks of business model to be viable, as well as dispute resolution and investors entry and exit, which eventually makes the sector vibrant. That's what will attract greater capital and make it independent instead of just dependent on budgetary allocations.
Okay, so just taking the conversation beyond the budget, and I want to sort of come down to you now, Kranti. I think you've touched upon it significantly in the course of this conversation that how SEBI has taken significant measures to really promulgate the the significance and the growth of this asset class, and how perhaps there has been some demands here made on the panel here that some interregulatory sort of problems need to be solved. I want to understand from you, Kranti, that this asset class, and talking specifically about InvITs, has really had a huge stamp of faith from the marqueest investors one can speak about. Talk the likes of CPPIB, Brookfield, the best pension fund managers across the world. When you speak with them during the course of your conversation with these investors and the other private investors of the kind, what really are some of the kind of concerns that keep cropping up from time to time? What are some of the demands that they keep making? Give us some sense there, which you think are really required from the SEBI's perspective to really solve for the growth of this asset class. Like you were mentioning to me that, Shrija, enough is never enough. People will keep demanding more and more, but if you were to give like 2 or 3 key recommendations, what would those really be?
See, again, it's not recommendations. The key focus in everyone where some of the investors are looking, and the names that you took, all of them are invested, and other marquee investors are invested, including sovereigns like RDR, PIF, etc., are invested now through InvIT structures. So there, again, like I said earlier, InvITs have proven themselves. Now, of course, when as a product evolves, you will always find, and in laws, we still have courts where Supreme Court has to interpret the constitution from time to time, right? You'll always find those gaps in the laws. I think now there is a critical mass of certain things that SEBI could or the government of India could look at, and they are actually already looking at. So, for example, I think a little more clarity on what is the future for unlisted InvITs perhaps would help give more clarity and some emphasis from the government that this unlisted InvITs is continuing to stay. At least people who are going to set up and establish, it's not going to go away or suddenly the rules won't change. That's perhaps one thing that can come, messaging that can come from the government. Second, there are various small operational things. I on multiple levels, SEBI and other regulators are already working on ironing out those things. So there's nothing really big picture which discourages investors or developers today to look at InvITs. Everyone is interested in InvITs. Of course, we would want more. So some clarity, and similarly on the REIT side, probably what investors give some more options like you have for InvITs today. Whereas InvITs, the options of InvITs available are almost similar to a business organized like a company. You can have a private company, you can have an unlisted public company, and you can have a listed public company. Similarly, you have an unlisted InvIT, you have a private listed InvIT, and you have a public listed InvIT. Whereas on the REIT side, there's only listed REIT. So maybe giving some flexibility on that side. And again, the treatment of these various categories differently because the investor set is sort of different. The other thing where SEBI has moved quite well, and that's the tricky bit for regulators always, and Prasad touched upon that. One bad apple and the product is dead. So the regulators have to tread a really thin line on how much to regulate and how much to liberalize. And that's what has happened with InvIT regulation. SEBI started because it was a new product by protecting retail investors. Retail participation was not encouraged. Like small ticket investments were not encouraged. You had to invest at least more than 5 lakhs, 2 lakhs, etc. Now SEBI slowly scaled that down and doing it in a phased manner, which will, I think, help a lot because the starting point of InvITs get public to invest there or give them an opportunity to invest in infrastructure or real estate. I can't buy a business park, but we can buy a piece of the business park if it's a good business. None of us can buy transmission lines, but we can buy a piece of, and it is InvITs are structured as a risk-free investment. It is like a debt instrument, but no assured returns. And second, it has participative rights like a shareholder in a company has. So it gives you best of both worlds, encourage a little more, and we have a great product on our hands. And there's no specific demand. See, again, there could be list of 10 demands that stakeholders I work with or other stakeholders may have, but nothing really big picture other than maybe some streamlining and continue the consultative process. SEBI has been very good with that. They have been taking feedback. Please continue with that. That has been really helpful in encouraging this product.
I think we had
That
a
I think is the biggest demand, perhaps.
I think we had a very meaningful discussion today. We spoke about quite a few interesting ideas coming to the fore, asset recycling from the state, what has been in the markets of Australia, Prasad alluded to. Harsh spoke about the fact that the real proof of the pudding will lie in the fact that when you have more savings of retail investors really channelized into instruments like InvITs, that will be the real testimony of the standard test of the markets for InvITs. Kranti spoke about the fact that SEBI has done enough, and while there could be endless demands from various stakeholders, one needs to really applaud SEBI as to what they have done, because we have 9 InvITs right now. And perhaps he also reiterated the fact that the jury is already out, that InvITs have established themselves as a very effective instrument. Now, gentlemen, I want to ask you this question. We spoke about quite a few assets here: transmission assets, renewable energy assets. We spoke about power assets, road assets. But I think this entire conversation post the COVID, if I've heard one terminology bandied around very well, it's been digital transformation. So, what is the role of digital, the so-called technology, in this entire conversation of InvITs? Does it play any role, digital infrastructure? Help me demystify that. Perhaps I can come down to you, Harsh, begin with you, and then go on to other panelists.
So I think, I don't think digital and InvITs per se are interrelated, and the impact of digital is in every sector today to a different extent, right? The first one, if you look at the road, FASTag, right? It is going to transform the way toll is collected in the country, and that's one way of digitizing and formalizing the sector. And if you would have looked at 10 years ago, this was the norm, let's say, in developed countries, in Singapore, in several other places. And people used to think about that, can that be done in India? Or it's extremely difficult to be done in India, and therefore it's never going to happen. Here comes an administration in the span of 2 years. We are seeing that FASTag becoming mandatory. We're yet to see that, but again, 75% implementation has taken place. So that's the impact of digital. First, I would say, primitive level of digitization of the sector, right? So that's the impact it can cause on the road sector. Similarly, for electricity sector, the impact of digital is far, far greater. But again, that's limited to the sector, with cost of renewable energy coming to grid parity almost, the source which is free for India, and the only investment that happens in how do we take that source, generate and deliver the electricity to where it is needed. A lot of digitization efforts are going to take place. And within the electricity sector, it is going to go through the churn that we have seen in telecom over 2001 to 2010, with electric mobility coming into place in next 10 years. And the biggest guzzler of energy in the country, which is oil and gas, getting replaced with electricity, and with a source of fuel which is solar and not oil and gas, is going to transform the entire value chain. And digital will play a very, very crucial role there. But not related to, so every sector will have a different digital lever, which will, and a digital evolution of the sector. But I think to InvITs and reach a far more regulated and commercial construct, it's going to only improve the transparency and communication. But beyond that, we don't see digital getting impacted this InvITs and reach per se directly.
Prasad, you want to add to that, the role of technology increasingly in infrastructure space? What would that really be?
So I think in addition to what Harsh said, maybe I'll just add two dimensions. So one is, and he alluded to that. See, frankly, in today's world, every sector will have a digital and a digitization content, right? I mean, frankly, if you're not digital, you're not going to exist. That's the reality of, I think, the world we have fast gotten into, obviously far accelerated by the COVID, and therefore far more and faster adoption of tech way or digital way of living everything. So that is one. Second, but if I have to answer your question a little more at a micro level, what does it mean and link it to say InvITs? I think digital itself will create a separate sectoral or subsector asset class, if you might call it that way. So we talked about transmission lines, we talked about renewable energy, we talked about toll roads. Take in point something like data centers, right? If you have large data centers and large contracts, see any project or sector which has stable underlying long-term cash flows backed by robust contractual frameworks and handled by strong, well-governed parties with strong operating strengths, I think that can be, it's an inevitable asset. So tomorrow, can I see that large data center kind of things being taken to the InvIT market? I think it's imminently possible. From our stable, I briefly mentioned, we have set up a platform on smart metering projects. It's a joint venture between NIIF and Energy Efficiency Services, which is a public sector company. Two of us have come together to across the country. We have already have a couple of million smart meters out there. And if once we start expanding this program, is this an inevitable asset class? Most certainly. So I think that's another dimension which will get added, going back to your question in terms of what does digital and digitization mean for InvITs.
Kranti, you want to add to that before I get on to the concluding remarks from each one of you? One concluding trend that each of you see in the role of InvITs in the infrastructure story going forward.
I think I won't have any more concluding remarks on InvIT. Generally, I've spoken enough, but just touching upon the points that both Harsh and on the digital economy and the impact on InvITs and REITs. And I actually sort of agree with the point Prasad made that this will going to create another segment of InvITs or REITs. For example, he mentioned data storage centers. There could be storage of renewable clean energy. That could be another sector which could look into InvITs. And we were already seeing a lot of IT and business parks in India's IT hubs seeing higher levels of occupancy or demand because of the increase in the digital requirements of the IT infrastructure or IT usage by people. And lastly, what we use every day, shop online and everything, the logistic backbone of that entire economy is again an eminently inevitable asset, so to speak. So I think this digital transformation in the longer run is also going to be supported, or we can use InvITs to support and finance this. And one other overlooked role that InvITs can play is also in your insolvency and debt restructuring, where developers who have gone down have a mix of good and bad assets. InvITs as a useful tool, and hopefully in next 6 to 8 months we might see one of that happening. Fingers crossed. So that's what I said. My concluding remark, I said I won't make one, but I'll probably make one is InvIT and REITs as a concept is very malleable. It can fit lots of areas and avenues related to capital raising for funding or financing infrastructure projects in this country.
Harsh, concluding remarks. Kranti said that the products are very malleable and can fit to any capital market structures. What sort of would be your point of view here?
So I think as a concluding remark, I would just start from what you said. I think InvITs have arrived with the size of investment and variety of assets that are owned under InvITs and REITs. And we see a bright future of this instrument in the country and playing a meaningful role in the infrastructure needs for the country. And as Prasad mentioned, it's not one instrument which will make the country, but it's multiple approaches which would eventually allow us to meet the infrastructure requirement of the country. And InvITs and REITs do offer one of the promising tools which will play a key role from both asset recycling, attracting new capital, and channelizing India's savings into Indian assets. And I think as I said, we see a brighter future for InvIT market per se, and we see a lot of growth, subject to some of the things that we mentioned of interregulatory issues getting sorted, more liquidity coming to the sector, and more projects coming in, which will make it a thriving market. But otherwise, we are looking forward to the next few years for several times the growth in the sector.
That's a huge dose of optimism coming here. Prasad, concluding remarks on sort of what all we just spoke. What would that really be?
I think, Shida, honestly, I will just reiterate what all of us have discussed. Clearly, everybody is agreed. There is an array of products, array of tools out there, which the country has, the government has unleashed, the private sector has used, and each has its role. And within that, the InvIT as a product, I think, has really, grown and ballooned. Progressed well in the last couple of years. I think it has a extremely strong future in the whole portfolio of scheme of products which are out there. More so going forward, I think we remain optimistic about it because it's a product, again, Harsh mentioned about that. It's a product which can take investments from a range of investors. So on one hand, you have government itself, which is sponsoring InvITs, which is a strong positive. You have sophisticated institutional investors, infra funds, sovereign funds, pension funds, which are backing it, to the extreme other end of the spectrum, which is public InvITs, where you have retail public participation also. I think it's up to us, as I said, to keep contributing good projects, good structures into all of it, so that this sector remains healthy. It blooms further, so that we can create strong success stories within the infrastructure asset class. Thank you.
Thank you, gentlemen. That was extremely meaningful. Some very meaningful points and observations made there. And I'm sure somebody in the government has enough to copiously taking down notes here from this August panel. Some very interesting points and recommendations made here. But before we sign off, I think it's time to do some light trivia, fun questions. I think we've had a very heavy questioning here and we discussed some quite a few heavy loaded stuff. So I'll begin with you, Prasad. Give me your New Year resolution for 2021.
I don't make any New Year resolutions.
You just so significant. You just like dodged my question and like how?
I just believe in living in the moment.
Harsh, you can't give me that answer.
No. So I do have a New Year resolution to be healthier and read more. So yeah, it's a cliched resolution. Let's see how long it lasts. But yeah, that's what it is.
Kranti, what about you?
Travel a lot this year if COVID permits.
I think all of us are looking at
Interesting.
sort of
Yeah.
getting to a travel bandwagon. Harsh, if you were to give me one, sort of very passionate appeal that you would have for the government, just given what we have seen in the social infrastructure space, for the healthcare particularly, what would that really be?
Okay, within healthcare, I think maybe expediting the vaccination drive for the country and maybe mm, do election and say that you need to come for a voting to get a vaccine done. You'll have a 90% voting in the country. So
That's an interesting idea. Prasad, what book are you reading these days? Now, you can't tell me I'm not reading any books, also, Shrija.
Honestly, off late, I have not reading anything, which is in particular. There's so much other stuff to read.
I think Prasad is just dodging all my questions. So, Kranti, I can move on to you. You have to give me one book that you recommend both your other co panelists to read this year.
The Razor's Edge.
Okay. Okay,
Somerset Maugham. Yeah.
Okay, gentlemen, I think we have had a very interesting chat here, and thank you so much for your time and energy to this. And I look forward to seeing all of you next time on a very interesting panel discussion that we keep doing from time to time. Hopefully, the InvIT story, as all of you mentioned, is extremely malleable, will only evolve, and there's just so much to cover from time to time here. Thank you, Prasad. Thank you, Harsh, and thank you, Kranti, for putting your time and energy to this. Thank you so much. And thank you to our Mint readers and watchers. If you have any questions, do write to me, and perhaps you can have Harsh, Prasad, and Kranti once more congregate for taking on your questions. Thank you so much. Thank you,
Thank
everyone.
you. Thanks.
Thank you.
thank you.
Bye.
Thank you, everyone.
Bye.